Hey, hello, my dear friends. I'm Chris, Elliott Wave Cafe. Welcome to my daily videos on the market. We take a look at what's happening in here in stocks and in crypto. It is the 23rd of February. Look, we've talked so many times about how weak the market acts, how badly it behaves, how many contradictory things we're getting from all sorts of places, and obviously how tough it is to get a direction in the market. Why? Because the moment you think it's going to do something, it does exactly the opposite. It makes you think it's going up, it's going down. It makes you think it's going down, it's going back up. All of a sudden, while we're sitting just above the 6,800. This is a huge level in the S&P 500, and today we're coming and attacking that level once again. And I don't know how much longer this can last before it gives up, and then we start an avalanche of selling down. If you look at this chart that I'm showing you in here, you know that October 10, when there was a renewed U.S.-China tariff threat, and then we had the market hasn't gone anywhere. Then we had the Fed in December cut 25 basis points. They didn't do anything in January, but they cut. I think they had a meeting in January. From as far as I remember, time is just flying. But I know they did cut in December a little bit, and they also start, some kind of a bond purchase program. And but the market, it hasn't done anything. We're selling off in things like software, and you can see the market heavily being sold off. There's multiple areas that are weak. Stocks that have been really good leaders that are down 50% from the highs. So things are just not pretty. More than that, we're entering into a period of weakness, seasonally speaking, until I think middle of March, if not a bit more, where historically, stocks haven't done well. So I'm cautious and I continue to stay hedged. I'm trading everything I can from the short side. I'm trying to sell the rallies that the market is giving me. I'm scared to do it too, because it's like, I don't want to be too big on it, just in case there is a news that hits and it shoots through 7,000. But there's just nothing healthy about this market. Cryptos are not acting that well. Bitcoin is trying to retest the lows, so we'll talk about this here in a second. But look, you're looking at this level, 6,800. It's as pretty as they come, as pretty as they come. It's huge right there. In some other charting platforms, you don't see it as well. I don't know, but I was looking at TradingView, and we can look at that in a second. But here it looks very nice. It's got these multiple tries to kind of get above the 7,000, and it's just not doing it. And this smells like a one and a two. I think I put something on Twitter. I think I did. I think I put something on Twitter where let me just duplicate this, and I'm going to go and look at that count in the S&P, because it's interesting. But look, I'm looking at the futures on TradingView, and it's kind of the same. We're below the 50. Look how many times we're now rejected at a 50-day moving average. And the more we leave below this level, the weaker this market gets. That means that people like me, and maybe hedge funds, whoever is watching this market, and they believe the 50 as being a big level. They just don't want to let the prices get below there, above there. The moment they do, they know that there's going to be some bigger buying in the market. And so far, the S&P lives below that. The Nasdaq, come on, the Nasdaq, it's well below that, and it's actually well below the 20-day moving average, which has crossed the 50. The Dow Jones, it's for the first time since back in November that it breaks the 50-day moving average. In here, it broke. It sit below it a few days, maybe about a week, and then it went back. But right now, if you've seen some of my videos from last week, this is that failure that I talked about. And now we're doing this and this, and what if this starts to accelerate into a larger third wave? And that sends me over to looking at the wave count, and I'm going to go here under my counts and see if I this is the Q. I think I have it under the S&P. I think I have it under the SPY. God, I got way too many things going on. Okay, it's right here. So let me make this a little bit bigger, but this is what I'm seeing in here, right? You have a nice impulse, 1, 2, 3, 4, and 5. Beautiful move, beautiful move. And then an impulse off the highs. Then you go up in what it looks to be an impulse. I mean, you can do a W if you want, and an X and a Y. Again, I say this many times. I don't have a problem with how you label a corrective move. It's still corrective. So it really doesn't matter. The point is that if it's corrective and it comes after an impulse, the next move it's in the opposite direction. So if the market is down, a correction is up, the next leg is going to be lower. This move in here, if it's an ABC or a WXY, I couldn't care less, because even if you label it ABC, you can still get an X, and then you can still get a Y, but still be corrective and then go down, right? The more important thing, it's this impulse, the one that starts it, and then the corrective pattern in here could be a bunch of different things. Could be a flat, could be, it's just weird. It could even be a triangle if this whole thing it's an ABC, right? It doesn't have to be a wave 2. It could be an A, a triangle in a wave B, and then you sell off in a C. So corrections are crazy. But if this is right, and this was the B wave, or an X wave low, whatever, we're breaking below it, and who knows? I mean, look, you've got your initial sell-off. Maybe we're doing a small wave 2, and then all of a sudden we begin 3, 4, and 5, and we're below. The equality between this decline, if it's happening, and this wave in here, it's at 1-to-1. It's at 669. So that's kind of what I'm watching in the S&P 500. So like I've talked, I think on Friday I did a video, or maybe last Thursday, on on kind of the corrective move. I think I looked at A-Lab. That was on the other side, right? It was on the bullish side with that corrective move. But watch the fib in here in the S&P. So we're going to be watching if it retraces, if it goes up. Right there at about 686 is the level that I would be interested in watching to see how the market behaves. Because if it goes, if it only goes to 32%, 38%, that means it's going to be a stronger sell-off. What have you at 61.8? If it does that, and then it goes down, and that's what, those would be good levels to kind of watch, to kind of get involved. But again, this is a huge level, 6,800, right there, big level. Right there, 6,800 in the S&P 500. I wanted to show you a couple of other things in there. I also wanted to. So again, we sold off into the small caps as well. Again, we sold off in the Dow. Right, we're breaking below almost 40 in the RSI. I mean, a pretty big break. The Russell, it's also kind of weak, but I wanted to show you kind of what's going on into this ratio, which is the one that tells me that the risk is increasing. You're looking at the investment grade corporate bonds versus the 7 to 10 year treasury yields. So when this line goes up, the risk is on. People are buying corporate bonds, right? When this line goes down, people are buying treasury bonds, so or treasuries, right? That's the move towards the safety. They don't want to give the money to some corporations and stuff like that, things that are riskier. They want to give the money to the government and make sure that you receive that yield. So look, it's been telling us problems are appearing, before the market starts selling off. And this one has been starting to head down. You had a double top in there. I don't know. I look at this every day. Every day I look at it and I see what's going on. I also look at the HYG, and this HYG is up at the top. So this, right there, it's the high yield bonds. This one looks better. It's they haven't sold off this one that much, but it's not like it's rallying too strongly either. So I don't know. I got my I got my fears. All right, let's take a look. Let's take a look at Bitcoin. Silver came back beautiful, beautiful today. I think we're still in that fourth wave. Look, I said, a sell off, it's strong. Maybe it was a bunch of leverage. We know that there is the margin requirements. I don't know who takes care of CME or whoever takes care of this, but they raise it into that big rally into the 120, and people, they just couldn't put up more margin if they were short, and they got killed. They got killed, and it moved from 120 down to 63. Now we're back at 88, back above the 50-day moving average. I think that's good. That's good for silver. It could be it could be like a fourth wave triangle. What I'm, since I'm still have some longs in silver, my fear is that this is a B wave and then we fall back down. That's going to be nasty. But, I'll still give it the benefit of the doubt, and let's see how how it behaves in here. But it's still the fact that it climbed back above this. I like it. I like it. All right, Bitcoin time before I get out of here. So 64,696. That's where we are in Bitcoin, coming back down. If I go to the Bitcoin wave count, okay, what's going on in here? Let me see. Because I thought I had, oh yeah, there you go. It was only 1 hour, that's why. All right, that's the one that we're following. That's the one that we're talking about. And if this is a fourth wave and we're starting to kind of come back lower, and it seems that it's trying to finish off a fifth wave in here. Very interesting. Let's see. It could be a truncated A, B, C, D, and E, and we're coming back down. Nobody knows how far this will go. Where will it stop? How will it look? Because why? Because nobody can read the future. So you can look at any signals you want. You can look at RSI. You can look at all kind of readings on chain. You can look at, the most amazing technical analysis, and all the indicators in the world are not going to tell you how this wave is going to look like by the time it's done. So the only thing that I know is that if it is a fifth wave, it's going to be followed by a move back up higher, some sort of a corrective move, or an impulse higher if this whole thing it's an A, B, and then down in C. So I know where we are. I know how the pattern is, and now I'm asking myself, what am I going to do with this information? What am I going to do with this information? Am I going to short? No. Am I going to long? No. Am I going to wait? Yes. How simple is that? It's very, very simple. I'm going to wait until the market gives indication for me that I should start buying it. And before that happens, there's going to be more weeks that are going to pass by. So I'm going to come in here every day, and you don't have to watch this video on Bitcoin, because every day you're going to come out here, although I do want you to come and watch, every day that I'm going to come here and talk about Bitcoin, I'm going to tell you it's not time to buy yet. It's going to be days and days and days and days until it's going to be time to start buying Bitcoin. But I'm going to continue to analyze what's happening with the price, how it develops, how Elliott wave works, how the decline unfolds, and the signals that is going to continue to show us as it's moving along, because that's the learning part of it. That's what keeps us out of trouble, and that's what tells us what to do next. So based on this, we could get a flush down, then a correction. There's going to be many ways they could happen in here. That's my preferred pattern for right now. But I can tell you, all this in here, right? All this, let me just get rid of that. It is a sell-off that continues. It's underneath the moving average. We have a big crossover. We're coming into big support into that box. But it's not even one sign in here that tell us to buy the market, at least from what I'm watching. Somebody else might have something magical and they can tell you buy with both hands. I see What's his name from MSTR? God, I got a brain freeze. Saylor, right? Michael Saylor, I guess. He's keeps buying Bitcoin over here. He might know something I don't. He might trust so much this Bitcoin thing that, and I own Bitcoin. I own it from 5,000, from 6,000, from 7,000. So this doesn't scare me that much, but it's I'm not gonna buy in here blindly. You know, so whatever this is, it's not ready yet. Okay, so we'll see what happens in here. It is, what is this? This is big level, but not even one black bar in here that can tell me, hey, Chris, do something with this. And there's going to have to be a few of them before a low is formed. We'll see what happens. And again, the equity markets are very, very vulnerable. So be very careful with those. I know markets can turn in a second. There could be news and stuff, but listen, if these guys are unwinding positions, if they're unwinding positions up here, and they do that by gapping up, by creating buys, so they can unload, so they can make people believe that it's going to go up, so they can still have liquidity, and they want to get out of this market slowly before everything starts to move down. Then that's what they might be doing in here, and that's why we were just not able to go anywhere yet. But when those things start falling apart, this we're going to cascade lower. And I want to be short when that happens, and I don't want to have too many longs when that happens either. But again, if you're crossing 7,000, all bets are off. All bets are off. We're going higher. That could be the signal to for the next part of this bullish market. And instead of this whole thing being a fifth wave, this is a one and a two, and we're wrapping up higher. So I'm not here being all doom and gloom, and I'll know when to take my chips and go home. But so far, that's what I'm seeing. So thanks for watching. Let me know what you think. I'm on Twitter, I'm on Discord, I'm on YouTube, I'm on Substack. You can find me there too. A bunch of subscribers there lately. And talk later. Bye.